We're going to start today's unit by clarifying three basic financial terms that you have probably heard before. They are saving, investing, and trading. These terms often get used interchangeably and thrown around a lot. And while in casual conversation, they won't matter. In practice, it could mean the difference between this and this. Let's start with the concept of saving. We often hear people say things like, I'm saving for retirement, or my retirement savings is off the chain, yo. But what does that really mean? Savings can take on many different forms. It could be just simply not spending. I could be finding coupons to try and save money off of a purchase. It is more likely that I'm setting money aside for a specific goal, or I have money left over after I have paid all of my expenses. For the purpose of this class, we're going to focus on these two definitions for saving. When we think of savings, we are putting money aside to make a larger purchase in the short term, usually between 1 to 3 years. We could also be saving to build an emergency fund in case of job loss, car repairs, or a potential zombie apocalypse. The goal with your savings is safety. The last thing you want is the value of your money to decrease and potentially not be able to make your purchase. You also want access, what we refer to as liquidity. You don't want to have to worry about having to find a buyer in order to cash out and receive your money. Options for savings include savings accounts, money market accounts, and CDs. The trade-off for this security is slow or potentially no growth. Rates usually hover around or below the current rate of inflation and make it difficult for savers to really see significant gains. For example, if we took a look at a big bank and their current offering of a 0.01% rate on a savings account, if you were to put $100 in that account today, 1 year from now, congratulations, you would have a whopping $100.01. Now, here's where inflation comes in. If you had an item that cost $100 today, at a rate of inflation of 1%, 1 year from now, that item would actually cost $101. So while we might not be losing money in our savings account, you can see that we're actually losing purchasing power. We can buy less with our money. Now, unlike saving, investing is focused on long-term gains. This usually involves the purchase of an asset, stocks, bonds, mutual funds, real estate, or investing in a business, with the expectation that the value of that asset will increase at a rate that is higher than inflation. However, that increased returns comes with a greater risk. Remember, when saving, you are giving your money to the bank in exchange for a guaranteed rate. With investing, you are buying an asset with no guaranteed anything. Also, your investment is susceptible to short-term swings in value. But if we are invested for the long term, 3 years plus, we have the ability to ride out the short-term losses and earn a return greater than our savings. But what if you want to make money in the short term, even as soon as the end of the day, or in the amount of time it took you to watch this video? That's where trading comes in, sometimes called speculation or sometimes called gambling. Trading involves putting money at risk with the hope that you will earn a higher return in a very short period of time. Day trading is probably the most common activity associated with this type of risk. You might hear on the news that a study shows that donuts increase brain power. Without knowing anything else about the company, you may take a position on that stock. And as a result, you might quickly buy and sell that position in a very short period of time with the hopes of making a greater return than holding that stock for the long term. While there is no wrong strategy, and oftentimes people will include all three of these in their financial plan, it comes down to your goals and what you want to get out of the investment. We will spend time discussing each of these strategies in further detail and help answer the question of which one is right for you.